Good afternoon and welcome to FBN Charting Point's technical look at ag markets. My name is Brian Como and today is November the 21st. All right, before we'll read the disclaimer first of all. Futures trading and options involves the risk of loss. Please consider carefully whether futures and options are available or are appropriate to your financial situation. The material is provided as is and for informational purposes only. It is not intended to be a substitute for specific financial trading, legal, or tax advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the statements or any information contained in the material, and any liability is therefore expressly disclaimed. Past results are not necessarily indicative of future results. All right, just want to take a little bit of time for some housekeeping today, just to give you an idea as to what to expect from us for the balance of the week. We'll call this the holiday schedule. So Thursday of this week, November 23rd, is Thanksgiving in the U.S. As a result, U.S. markets are closed. However, ICE canola is open, although it often does trade with a lower amount of volume. Forward markets morning commentary will be delayed on Thursday, as I'm going to sleep in and focus on canola more in the morning commentary after the open. And there will not be a charting points video on Thursday. Our normal cadence is Tuesdays and Thursdays for the charting points videos. And this Thursday, there will be no charting points video. On Friday, November 22nd, the U.S. markets close at noon, so it is a shorter trading day. But our regularly scheduled weekly reports will be released on Friday as per usual, perhaps a little bit early if the market does close a little bit early. So that's what you can expect going forward from us for the balance of this week. All right, today I thought I would touch a little bit on the wheat markets. We have a couple of wheat markets who have tested some support recently, and today they showed a bit of a bounce. That's not to say that we're safe on the wheat market just yet, but there is a technical move to support that I think we should talk about, which is this is December Chicago wheat. We saw a bounce off of support there. That's two in a row. As you can see, this market continues to look very sideways, and there's a couple of things that are kind of helping us keep that kind of bias towards this market. One is the convergence of moving averages. You can see that the 50 and the 20-day moving averages are now trading very close to one another. You can also see that previous highs are tested or relatively close to being tested, and previous lows are tested as well. So there hasn't really been a new high or a new low placed in this market since mid-September. We continue to see the other moving averages kind of trend lower as well, which is moving towards convergence of the other moving averages as well. So for all intents and purposes, CBOT wheat, or Chicago soft red winter wheat, is trading in a neutral pattern at this point. I would say the same can be said for hard red spring wheat. We did see a big move lower as a result of the small grains report that happened at the end of September. Since then, though, Minneapolis wheat has kind of been trading in this pattern. Call it between $7.50 and $7. It tested that again today. It also bounced off some of that support today. We are starting to see the convergence of these moving averages here. So again, for all intents and purposes, we are seeing a bit of a neutral market in the spring wheat. The one exception here is the hard red winter wheat, which late last week we saw on Friday, actually, we saw this market punch to a new low. It tested another new low yesterday and somewhat rebounded here into today's session, as we saw gains also in Chicago and Minneapolis. Having said that, this market has not been able to make it above the 20-day moving average for any sustained period of time, or really make a close above the 20-day moving average, since way back in August. If you really want to get we haven't really seen it trade sustainably over the 20-day moving average since late July. So that is a pretty big resistance point for Kansas wheat. We're also seeing a trend line here that has been difficult for Kansas wheat to move higher. So we are still seeing degradation in Kansas wheat. Now, in the past, we've talked about that being, mostly a comparison to, Russian values or Black Sea values. Generally that mid protein wheat or the 11.5 to 12.5 protein wheat is what HRW competes with on the global scale. But I want to put a bit of a different spin on it today, and I'm not just saying that my thesis on that is dead or it's not correct. It's just I want to talk a little bit about some of the spreads. Now, here is a hard red winter wheat versus Chicago wheat spread. As you can see, that whole time that we've been seeing kind of price movement move lower in the hard red winter market, the spread between Kansas and Chicago has also been narrowing. So that signals that there is, a significant amount of this, 11.5 to 12.5 protein around, and that the valuation of it is moving lower over time relative to the soft wheat market. So, that tells, I would say, half the story. The other half of the story here is that the Minneapolis or the hard red spring wheat futures levels spreads between hard red spring and hard red winter have been rising. So there is a convergence or a divergence happening as well. So there's a convergence happening down to Chicago on the part of the hard red winter wheat, and similarly a divergence higher on the hard red spring wheat. So this isn't necessarily about protein levels specifically or the fact that there is too much protein. I think it is a fact that there is just too much hard red winter wheat in the system, and that means the price is kind of floating lower down towards the Chicago end of the pricing structure than it is moving towards the higher end of the pricing structure. So that doesn't necessarily give us clues as to the entirety of the fundamental picture in all of wheat. There are some signs that show that wheat as a whole has moved down to the point where we are seeing some demand surface, and we've seen some bottoming action in some of these markets as well. Let's take a look at what hard red winter. This is hard red winter prices, cash prices. This is in the Gulf of Mexico. These are for these lines here are all different protein levels. So you got 12.5. You've got ordinary, which I think is considered 11%, and then or 11 to 11.5, somewhere in that range, and then 12%. So it does kind of factor in some of the protein spreads in the market as well, in the cash market. And then the Pacific Northwest, there's a little bit of a spread to some of the higher proteins. As you can see here, there is a bit of a premium to the higher protein hard red winter, even at 13.0 and 12.0, and then ordinary or 11.0. So very small protein levels, but what I wanted to kind of showcase was this September to October period. Cash prices have generally been drifting lower for cash hard red winter prices. In juxtaposition, what we're seeing here, this is northern spring or dark northern spring pricing from this data, by the way, is taken by the U.S. Wheat Associates. That's both for the hard red winter and for the dark northern spring here. So here's a couple of different examples as well. As we kind of got into the end of October, we've kind of started seeing prices of these higher protein wheats start to, form a bottom, and even some are starting to gain some traction here. So as you can see, 14.0 protein dark northern spring has been kind of climbing as the month of October or the last 3 or 4 or 5 weeks are concerned. We're seeing that same Pacific Northwest position rise as well. This would be comparable to Canadian values, for example, of our 13.5 protein wheat off the coast of Vancouver. There might be some freight difference. Today, I think the price that I've seen reported is 309 for Vancouver, 13.5 protein. So that would be right around here. So 314 for U.S. dark northern spring at 13.5, and 309-ish or something like that for Canadian CWRS off the coast of Vancouver. So just a little bit of a freight differential there. So a little bit of a differential happening in the higher protein higher protein markets, and I did want to point that out. I don't think that signals that there's a shortage necessarily of high protein wheat, and that it necessarily means that there's going to be a big rally in the high protein wheat markets. But I think what it does showcase is that I don't know if we should necessarily be as concerned with the Kansas wheat floating down, because I do believe that it's probably just pricing itself relative to Chicago and pricing itself relative to Minneapolis, and wherever it finds the nice balance in between those two is probably where it will find its bottom eventually. So hence why I kind of am looking more towards the patterns that we're seeing in Chicago and the pattern that we're seeing in Minneapolis now, where both of those have kind of tested some support and have started to move lower. So I might get more cautious or a little bit more bearish of this market if it starts to make a new low. But today's bounce was a little bit of a positive turn in the market, and a rejection of that support level. So that might be a positive to look forward to going forward. I do still think when we look at Canadian pricing, for example, even with the Canadian dollar has been quite volatile. The U.S. dollar has been falling, but the Canadian dollar has not been rising at the same rate. But we have seen the Canadian dollar rise a little bit. I should have included a chart of the Canadian dollar in here. It's about midway through its current range uh, right now. But what we're seeing here is some pretty strong basis levels for 13.5 wheat. This is northern Alberta region that I've taken this from, but the pattern is very similar in most of the regions in Western Canada. So we've seen this big kind of push through October and November, and it's kind of starting to flag around, just above the $2 basis level. Now, these again are posted bids, doesn't include necessarily specials. This is prices as reported to PDQ or the Alberta Wheat Commission. But it does show that basis levels are very strong for wheat. That means that there is still some demand in Canada for it, at least at this time, and we have been moving quite a lot of it through the system. It's been one of the bright spots in the Canadian export picture so far. So hopefully that kind of paints a little bit of a different picture on wheat and what we think about wheat, and maybe more of a focus right now on Chicago and Minneapolis's chart structures than that of Minneapolis. All right, getting into the oil seeds now. Really tumultuous last week or so that we've seen in soybeans, with the price rise as the heat and dryness ramped up, and then once the rains were forecasted, we saw that fall. But now that the rains have been forecasted, we're seeing it kind of come back up. It is kind of rejecting solidly the $14 mark, it seems, at this point. I did want to point out, so here's a map of the rains. Now, most of the soybeans are grown kind of in this area here of Mato Grosso del Sol. This is down here is Mato Grosso. This is Mato Grosso del Sol here, and Mato Grosso. This is the big state up here, and Goiás here. So some really good rainfalls in this area. I'll show some forecasts here in a moment. But so like what the narrative has kind of switched to is, the market was talking about dryness and the fact that there wasn't any rain falling, and the damage that may do to crops. A lot of it was still left unseeded. Seeding is behind pace, and this rain was needed in order to kind of finish off the seeding. But now what's coming into play is the fact that the rains are coming, but now farmers, there's some talk about farmers changing cropping plans, moving to other crops, maybe doing a single crop of corn this year, maybe doing a double crop of cotton, whatever it may be. There is some talk about lower acres. So now that the rains have come and given a little bit more confidence to the market as far as, okay, the soybean crop may be improving, but the size of the soybean crop may still be at risk because of some of the acreage shifts that may occur. So now here is the forecast for precipitation. This is from just now until the next 72 hours. So that takes us into Friday. Again, I've kind of done an overlay here to show where the large areas of growing areas are for soybeans. This is Mato Grosso del Sol, this is Mato Grosso proper, Mato Grosso del Sol, and Goiás over here. Those are those areas. These areas receiving a significant amount of precipitation, Paraná and Rio Grande do Sul, are still in in a pattern where they're receiving too much rain. So there might actually be the opposite problem happening there. As we move forward, this goes into Friday. As we move forward into Saturday, December 2nd, we see a considerable amount of precipitation coming here. With 1.5, 1 3/4 in some spots. There's forecast to be 3 to 4 inches of rain, and in this area here of Mato Grosso del Sol, and there's a significant amount of rain, 7, 8 inches. So this area here of Mato Grosso del Sol is likely to see some significant improvements, and there's lots of areas here as well in Mato Grosso that are going to get some very good rains. As you can see down here too, this Paraná and Rio Grande do Sul continues to get absolutely hammered with rain. It's getting to the point where we're probably going to need to reduce, yields in this area simply because of the flooding and the amount of precipitation that they have. It's still very early on in the growing season, though. However, most of the crop has only been planted in the last, 2 to 3 weeks. So it's still very, very early in this growing season to really write this crop off, which I think is another reason why it's difficult to rally this soybean market over the $14 mark. This is what the forecast looks like going forward. Meal has been a big driver for soybeans recently. It's also seen a lot of volatility. We broke down below some key support levels on yesterday, but recovered significantly after doing so. Kind of closed today right on the line here of this trend line, well above the 20-day moving average. So big head fake there. I don't know. There is a lot of uncertainty now that there's a new government voted in Argentina, and Argentina is one of the major drivers of this soy meal market. It would lead to believe that that things should loosen up in Argentina, and we should it should be favorable to the soybean crush industry and more favorable to crushing more meal. What that does to the meal price, I'm not 100% sure. I think right now they're still dealing with an acute shortage of meal, as they haven't had enough beans to crush in the last few months to satisfy demand. So that's playing a little bit into here as well. So the risk may be in further months, months in this soy meal market that are further out past December. Kind of moving into the vegetable oil complex here now. We saw some good trade today. It broke above some previous highs, is now testing this 50-day moving average today after moving higher. So we've seen some good response here out of soybean oil. Soybean oil had been really subdued recently, have been continuing to get pressured down, even with low stocks reported out of the U.S. So this is a bit of a welcome sign here that we're seeing a bit of a bounce. Where could this bounce to? I think from a retracement standpoint, we have the 38.2 Fibonacci retracement here, just below. That's at 55 cents a pound. And then we have this 61.8% Fibonacci at just around 59 cents a pound. So those two targets could be met pretty easily without providing necessarily a trend changing signal. But those will continue to help our markets here, particularly in Canada, because we're seeing a little bit of rise here in the canola market as well. So we'll get into that here. This is canola. We did see a rise last week that punched up towards or above $720. That's where we issued our recommendation. It fell off. It's come back to those levels now as it's testing almost that exact same level now. So there is a bit of a resistance there at 720, 722. I think it actually settled today at 722 and change. So a little bit higher than what the close was at. And, there's some resistance here just below or just around 730. That was the reason why we made this recommendation here, was on the test of that resistance level. Our next target, again, is this 770 area. So I could see, if we're going to see, I'm going to back up to CBOT bean oil here. If we see this move back into this $59 area for soybean oil, I think this 770 area is possible with canola. So we continue to look out for that. We'll probably layer in another recommendation, at least on the 2023 crop, on a test of that level. All right. Our last slide here is I just kind of wanted to show the relationship of some vegetable oils in China. Now, China isn't necessarily the largest consumer of vegetable oil. That would fall to India. But I think that they definitely be a very close second, and the pricing of vegetable oils in China is important. What we've seen here is some stuff, some themes that we've been talking about for a bit about the spread in between soybean oil and canola oil coming in. You can see that that's happened now. We're starting to see a pretty strong correlation in these chart movements here between canola oil and soybean oil, and that signals that maybe we are at an area where um, the uh, the correlation between the two is going to remain strong, and that this spread here in between, which is about $200, is likely appropriate. Palm oil is now slipping back down a little bit, and is we're gaining some off of palm oil. But as you can see, as we got into the end of October, the price of soybean oil was relatively low compared to the price of palm oil. So there is some correction happening there. I wonder if we're getting into fair market value, at least when we talk about the spreads between these commodities. We're getting into fair market value on the spreads between these, which means they all could trade very correlated together now going forward. So if we start to see, if we see uh, vegetable oil and soybean oil continue to rise from the moves that they've done off these recent lows, I think palm oil and canola oil could also go along for the ride. All right, that is all we had for you today. Just a reminder again, we won't have a charting points video on Thursday, but we will have our regular morning commentary on Wednesday. We'll have a delayed one on Thursday and the regular one on Friday. Thanks for watching. We'll see you again. We'll see you again next week. Have a great weekend.